Welcome to the Deep Dive. This is where we take that stack of sources you provide, articles, notes, whatever you've got, and really pull out the key insights, give you that shortcut to getting up to speed. So today's Deep Dive is based on a bunch of articles, all landing around June 10th, 2025. And it's quite a mix, actually.
Yeah, what do we got?
Well, we've got specific crypto project updates, some market analysis, corporate moves in the crypto space, and even a pretty big piece on global financial policy.
Okay.
So our mission really is just to cut through it all, see how these different bits might connect, and, highlight the main takeaways from this particular stack.
Right, and this kind of collection is useful, I think, because it gives you that snapshot of different forces potentially hitting asset values right now. You've got the micro stuff like project details right alongside these big macro signals, and that's often where it gets, well, complicated, but interesting too.
Definitely. Okay, so let's unpack this. Maybe start with some of the established players or, traditional finance getting more involved. One source mentioned Ripple in Japan.
Yes, the grants program.
Exactly. Putting, what is it, $200,000 into grants for Japanese startups?
Yeah, and that's a really interesting signal, isn't it? You've got Ripple, an established crypto name.
Right.
Actively putting money into growing a regional ecosystem. Now, $200,000 might not sound like a world-changing sum in crypto terms, but it's targeted. It's about fostering, real-world development, adoption. Specifically in a key market like Japan, it feels like a long-term strategic play.
Yeah, pushing integration beyond just, like, token trading.
Precisely. Encouraging actual innovation on the ground.
Okay, sticking with that theme, sort of traditional finance meets crypto. Or another source mentioned Canary Capital.
Oh, yeah, the potential ETF.
Well, taking steps towards it.
Yeah.
A Canary-staked INJ ETF. Something about setting up a trust in Delaware.
Yes, that's a significant step. It's really part of that convergence we keep seeing. Creating a specific trust for a staked injective ETF.
Right.
In Delaware, that's laying the groundwork. Basically, they're building the plumbing for a product that could give investors exposure to INJ price and potentially the staking yield, too.
Oh, okay.
All wrapped up in a familiar package, like an ETF.
Huh.
It just shows that increasing sophistication in packaging these crypto assets for, let's say, a broader audience.
People more comfortable with the old structures.
Exactly. People who prefer traditional vehicles, regulations. It's trying to bridge that gap,
Makes sense. So, okay, we have corporate investment, TradFi exploring new structures. But it wasn't all smooth sailing, was it? The sources cover some specific project performance, too. Bonk came up.
Bonk. Yes.
Apparently facing a pretty rough patch, like a 28% price dip over the month around that time.
That's right, a notable dip. But the interesting thing the source pointed out was what was happening alongside that price drop. Which was really high yield rates being offered, like 69% APY, and even, get this, 319% PY.
Whoa, hold on. 319% PY. What's PY? And why is so high if the price is tanking?
Good question. So APY, annual percentage yield, that includes compounding over the year, right?
Right.
PY often stands for period yield. It's usually the simple yield for a much shorter time frame, maybe daily, maybe weekly. It sounds astronomical, that 319%.
Yeah.
But it's likely a super incentivized, very short-term rate, probably designed to pull in liquidity or get people participating despite the falling price.
Oh, okay. Allure, sort of.
Kind of. It really shows you that dual nature of volatile assets, like meme coins. You've got high price risk, but then sometimes these really aggressive yield incentives on the other side creates a very specific risk-reward situation for anyone involved.
Got it. And Bonk wasn't the only one struggling. The sources mentioned Tron was also down like 14%.
Yep, Tron saw a dip too. It shows, not every project was doing well then. These individual numbers, the dips for Bonk, for Tron, they're crucial bits of the puzzle. They remind us that even if there's some general market feeling, project-specific stuff, community, tech, news can make things go very differently.
Yeah, it's not just one big wave.
Exactly. Crypto isn't monolithic. It's thousands of separate stories playing out.
Okay, but here's where it gets kind of contradictory, or at least interesting. Amidst those declines, one source focused heavily on Blockdag's fundraising success.
Yes, Blockdag. Big numbers there.
Massive. Stating they'd raised $291 million in their presale. And were even teasing some kind of NBA deal.
That $291 million figure, it's huge, especially when you put it right next to the price drops we just talked about for Bonk and Tron.
Right. What did that tell you?
Well, it suggests that, okay, maybe some established alts were struggling, but there was still a lot of capital flowing into certain areas, particularly early stage projects maybe. or ones with really strong marketing, like teasing a mainstream NDA partnership.
So chasing the next big thing, maybe?
Could be. It's a different kind of signal, isn't it? Less about current trading sentiment, more about investor appetite for perceived future growth, or just a really compelling story. That contrast is fascinating.
It really is. A complex picture, money moving out of some things, pouring into others. Okay, stepping back a bit now from specific projects, the sources also included a broader market call from an analyst, Michael van de Poppe.
Right, Van de Poppe, altcoin season prediction.
Yeah, he was apparently predicting an upcoming altcoin season.
And his reasoning, according to the source, was tied to Bitcoin dominance levels and market cycles.
Okay, explain that a bit. Bitcoin dominance cycles.
Sure. So Bitcoin dominance is just Bitcoin's market cap as a percentage of the total crypto market cap.
Got it.
The theory, and it's pretty widely followed, is that this dominance level cycles. Bitcoin has a strong run, maybe consolidates, then capital tends to flow out of Bitcoin and into altcoins.
Ah, the alt season.
Exactly. That period when alts tend to outperform Bitcoin. So when an analyst like Van de Poppe calls for one, they're basically saying they think the conditions, market structure, Bitcoin's position look right for that rotation to happen.
Interesting timing, given the mixed project performance we just saw.
Well, yeah, it adds another layer.
And then finally, something potentially connecting to all of this, especially the idea of money flowing into riskier assets.
Right.
A big move from the traditional finance world, specifically the Bank of Japan.
Yes, this is probably the biggest macro piece in the stack, the BOJ.
What do they do?
They decided to delay reducing their balance sheet and potentially even looking at bringing back some selective quantitative easing, or QE.
Okay. And the source linked that directly to crypto.
It did, quite explicitly,
Yeah.
stating that this BOJ action stirred expectations of an increase in risky asset values.
Right. But why? How does a central bank tweaking its balance sheet potentially boost something like crypto?
Okay, so it boils down to liquidity and the hunt for yield. When a major central bank, like the BOJ, keeps pumping money into the system, or signals it might pump more via QE, basically buying assets to inject cash, it does a couple of things. It increases overall liquidity.
More cash sloshing around.
Exactly. And it tends to push interest rates down. So traditional safe things like government bonds become less attractive because their yields are super low.
Okay.
So investors with all this cash start looking elsewhere for better returns. They move further out on the risk curve.
Towards riskier assets.
Toward riskier assets, yeah. And that category increasingly includes cryptocurrencies. So it's a reminder, really, that crypto markets aren't in some isolated bubble.
No, definitely not.
They're plugged into these huge global money flows influenced by central bank policies. The BOJ's move here is seen as potentially adding more fuel to that fire for risky assets.
Wow. Okay, so looking back at everything we pulled from this set of sources, all around June 10th, 2025, it really covers a lot of ground.
It really does.
We started with corporate stuff, like Ripple's $200,000 grant program in Japan.
That targeted ecosystem building. And then the TradFi moves, like Canary Capital setting up that Delaware trust, paving the way for a potential staked INJ ETF.
Right, bridging that gap. Then we saw the project-specific, some tough news, like Bonk's 28% monthly dip, even with those crazy high yields.
Yeah, the 69% APY and that 319% PY figure.
And Tron's 14% decline, too.
But contrasted against BlockDAG pulling in that huge $291 million in their presale.
Yeah.
And that potentially savvy marketing with the MBATs shows where some money was flowing.
Definitely. And all this is happening while you've got analysts like Van de Poppe calling for an altcoin season based on market cycles.
Based on Bitcoin dominance patterns.
And then overlaying everything, this major central bank, the Bank of Japan, making a policy decision about its balance sheet.
Delaying tightening, maybe easing again.
Which the source is directly tied to boosting expectations for risky assets, including crypto.
Yeah. More potential liquidity.
So, okay, let's wrap it up with this final thought for you listening. When you put all these different pieces together from that specific moment in time, you've got a central bank potentially juicing risky assets globally. You've got specific crypto projects having wildly different fortunes, huge fundraising successes next to significant price drops. And you've got market analysts predicting a major shift in fund flows between Bitcoin and altcoins.
A real mix of signals.
So the question is, how might these seemingly disconnected events, monetary policy, project specifics, market cycle theories, actually be influencing each other in ways that aren't immediately obvious? And what does seeing them all pop up in the news around the same time tell you about the underlying state, the pressures, and maybe the potential direction of the market you're watching right now?